Why is the dollar dropping? Back when the US was raising interest rates, the value of the dollar kept increasing. But have you ever wondered why? Despite the fact that US interest rates are still high, the dollar is now losing value? Let's break this down. Think about how much money it takes to weaken the dollar. In April of this year, around $30 billion flowed into Europe, which led to the dollar depreciating by about 10% against the euro. However, Europeans collectively hold $1.6 trillion worth of US assets, so imagine if Europe decided to sell off US bonds, they would also face a 10% loss due to currency depreciation. If you were them, would you still want to sell? Probably not. Here's the strategy the US is using. Back in 2023, the goal was to attract money from around the world to America by hiking interest rates. Now the US wants some of that money to flow out again, but they need to spend a bit of money manipulating exchange rates to weaken the dollar. Why? To make sure foreign investors who've purchased US assets worry about losing money due to currency fluctuations. This discourages them from selling off American investments like stocks and bonds. Essentially, it's a strategy of spending a little to protect a lot. Meanwhile, Wall Street capitalists are taking advantage of this situation. They're ramping up leverage, borrowing more money, and pumping it into the economy. As a result, the domestic money supply in the US is actually growing. With more money circulating, these capitalists can drive up the stock market and real estate values, inflating a financial bubble even further. So the big question is, how do we seize this opportunity to make money? What's the best way to position ourselves in this economic climate? Subscribe to this channel to find out.